Ben ritrovati lunedì mattina su Friday New York Stock Exchange, un rally in corso in questo momento per i listini. Ne parliamo con il mio ospite qui sul floor. Come vedete, come ogni lunedì, è Kenneth Polcari, che è direttore delle operazioni sul floor per O'Neil Securities. Kenny, ben ritrovato.
How are you?
I am very well. How are you?
I'm great. It was a beautiful weekend here in New York.
Yeah, well, but still very chilly for my taste, but yeah,
Today,
pretty
but it's
good.
getting there.
So now, not chill instead here in the market. We are seeing a rally going on. How can we explain this? Could it be, sell the rumor, buy the news, or there is something behind it?
Well, no, I think that's exactly right. I think what you had last week, and actually the last couple of weeks, was this anxiety building up over what people suspected or thought was going to happen. There was talk on Thursday and Friday last week about bloodshed and violence, and really kind of an ugly picture based on this referendum. And so we saw the market trade right down to just about the support, right? The 1830 level, which was the 50-day moving average. On Friday, kind of bounced there a little bit. It held. It didn't feel like it was going to get ugly on Friday, which I think was actually quite indicative, right? The market had reconciled itself to the fact that Crimea was going to vote to be annexed by Russia. Russia was going to take them over. Russia's not pushing any further in, and so therefore the situation seems to be de-escalating, which is, I think, what the market expected, right? Now, if that situation changes and we all of a sudden see Russia get a little bit more aggressive, then I think all bets are off and the market once again comes under pressure. I don't sense that right now. I don't think the market's sensing that right now, and so therefore, people have gone on this bargain hunting. Listen, overnight, futures trading actually did test lower, right? We broke 1830. It found support at 1825, traded there for a little bit, and then said, okay, there's no disaster here, and boom, right? They took them right back up and took back all the loss, and then added another 18 points to the S&P, which is where we are right now. Once again, testing the 1860 level, which I think is just about where we're gonna hit some resistance, at least for today.
And let's not forget that we had a terrible week last week. It was a really bad week for all the indexes, and not only because investors were looking at the Ukraine crisis, but also because of China. Fears of China came back for some reason on the market. They're not justified, or they are justified?
No, well, I think the whole China story has been going on for a while, right? That's not new news, and everyone keeps talking about a weakening China. But let's put this in perspective, right? First of all, China's been weakening for 3 or 4 years already. Look at the market's down 42% from the 2009 highs. We could actually be closer to a bottom than a lot of people think. Don't forget, China is in transition, and even an economy that's growing at 7 or 7.5%. But if it does that consistently, then I think that's much better than an economy growing at 12% that's all of a sudden going to not be able to do that at all anymore and then completely collapse. So I actually think the slowing China at the 7 or 7% rate is great for them, great for the world. There'll be some adjustment, surely, but that market has already started to account for that. And I think, again, that kind of simmers under the surface here, but I think people are now reconciling the fact that maybe a slower growing, stable China is much healthier in the long run.
And it seems that today investors are back on the market, back to buy stocks, and ahead also of a very busy week. Of course, the main moment, of course, of the week is going to be Janet Yellen press conference, and of course, at FOMC decision on the stimulus. It's a very peculiar moment. A lot of the debates around the weather effect on the economy. Of course, Janet Yellen is expected to address that again. What do you think she's going to say?
I think she's going to say, once again, just what the market expects. They're going to withdraw another $10 billion to bring it to a total of 30. I think she's also going to once again bring up the conversation about qualitative measures versus quantitative measures, right? We're very close to the 6.5% unemployment rate. We've already talked about that. Ben Bernanke brought it up in January that because we were so close and the economy's still not really where they want it to be, that they're going to have to start to change the measurement. They're going to have to look at other factors, and they're still data dependent. I think Janet Yellen is going to continue that conversation. It makes perfect sense. I think the market is expecting that that's what she's going to say because the market, does not seem to be concerned. Listen, we've gone through 2 reductions in stimulus, and the market has held in pretty well. In fact, tested new highs. And so the market knows that on Wednesday they're going to get another $10 billion cut out of the stimulus, and it's not panicking. And so, in fact, maybe that does tell you that the underlying economy, maybe you can't see it yet, right? It's embedded deep within, that the underlying economy is starting to do better. And this week is a perfect week. We're going to see a slew of data reports, housing, building permits, initial jobless claims, CPI. And so people are going to get a better sense of what it's going to be. Besides the fact, spring is coming, summer is coming. It's always a better time of year, right?
Even though we have to remember that all the data that we see are seasonally adjusted,
Right.
so probably the weather effect has been hyped to justify maybe a little bit of like slowness in the economy.
Right, but I think people, we've had that weather conversation now for a couple of months. I think people are kind of tuning that out at the moment, right? They're starting to look ahead and look forward, and they're starting to gather bits of data, like today's Empire Manufacturing, maybe a little bit weaker than what the expectation was, but stronger than last month, right? We're going to get Philly Fed at the end of the month, still growing. You're going to get Philly Fed at the end of the month, looking for a positive number there. They're looking for positive in housing starts and building permits, and so that's all good, right? That all talks about a strengthening economy, and so the market is the market's struggling to tell us that because it really wants to believe, but it's being cautious, and that's why I think you see this. We're stuck in this trading range at the moment.
What do you think is going to happen by the end of the week? If really there is going to be no surprise from the data and no surprise from Janet Yellen, can we finish the week higher and on new probably level?
I think that we at least run back up towards the highs. I'm not necessarily sure we're ready to break out yet. I think that we need some more data, but I think we're positioned better to move up than I think test lower again, right? We tested again. We did that last week. The market had every reason to crack last week, and the last couple of weeks it did not. And so if this data this week continues to come in what we expect, I would then expect the market to kind of move back up.
Kenny, we are almost at the end of the quarter, and the correction hasn't been here. We saw, of course, as a very short phase down, but still.
But see, that's an important point because the end of the quarter is, that's when mutual funds and big asset managers mark their books and send out quarterly statements to people. So now listen, we're only 2 weeks away from really the end of the quarter, right? We're near the highs in the market. So a lot of these asset managers are going to want to kind of hold it here because they're going to want their performance to reflect that, right? And so you got that whole issue playing. Now listen, if things really start to fall out of bed, then you're not going to be able to control it. But if things stay status quo, then there's a good shot that we end up kind of remaining right here towards near the highs.
And some analysts has already started revising down, as they do every quarter, their expectation for the earnings. So we might expect another support for the earnings for next quarter.
So earnings are going to start in earnest, the second week of April, as they always do. There's already been the chatter. I mean, we've been talking about this. How are the numbers going to come in? Are they going to grow top line revenues? Listen, we haven't been growing top line revenues so well, but yet the market continues to march higher because they continue to beat on the bottom line. We'll probably see that same story again. We'll probably see about 75% of the companies, outperform, but don't forget they will be on reduced estimates. But the market seems to be okay with that. They understand that's the way the game is played, and so they're okay with that.
Sort of a new normal right now. Yeah. Thank you very much, Kenny, and good luck this week.
Always a pleasure. Thank you.
E grazie a voi per l'attenzione e a domani.